Oh shit, there's no sound. Oh my God. Thank you. What would I do without you guys? I was just talking. I mean, I know, uh, you might want to stare at this face, but I think that you really want to get some of this information. So thank you. Thank you, Talene. So let's get back. Let me take a step back so that you guys can get some of the information while I was on mute. So I'm Dominique. I've been in the alternative finance space for multiple years. I started this platform. I've worked with startups all the way to multi-million-dollar companies. And this platform exists because there's a big problem out there for women, veterans, and underrepresented businesses, entrepreneurs, right? A lot of misinformation, a lot of, risking personal credit that really, when you come to the platform and you're ready to seek financing, those are a lot of the common issues that are holding people back. So today's course is all about separating your personal, can you read this? It's all about separating your personal and your business finances, okay? You absolutely need to be doing this. And we got to step away from the mindset of, well, this is how I've always done things. Nah, all right? And ask yourself, has that worked for you, okay? So time to open yourself up to something new. So get yourself a business bank account and get yourself a business bank account and give yourself some leverage. But when you're establishing business credit, guys, this is going to help you. If you are a startup, if you have no cash flow, if you have no credit, if you have challenge credit, or if you have no collateral, right? That would be real estate, that would be accounts receivables. If you're not there yet and you're just building yourself up, then you're honestly not going to get a bank loan. It's just not going to happen. Okay. So what you don't want to do is you don't want to be like shooting in the dark, like, well, maybe it was just that company and I might be able to go with this one, right? No, don't do that. Because what are you doing? Well, you don't know which company is going to be doing hard inquiries. You don't know what's going to happen, right? And I've seen it happen multiple times. So take a step back, right? Figure out what it is that you need to fix, and then you've got leverage. But when you establish business credit and you're in that position, no cash flow, no credit, no collateral, y'all, you don't have to be using your debit cards. You don't have to be using your personal credit. You can literally get tier one vendors, which are starter vendors that you're currently using, right? You apply this to a system that you're already using, okay? That way it's not frivolous, okay? So you apply this to something that you're already using. You are using, I'll give you a real life example. We have multiple clients that have started off with over 700 credit score. Over 700 credit score when they first started their business, but they used that in the very beginning, right? Use it in the very beginning to get things like office supplies. If they're working in restaurants, they're getting it at like Sam's Club, they're getting their, Tractor Supply, Lowe's, Home Depot, all of this stuff they're funding on their debits, and from personal and risking personal credit. You don't have to do that, y'all. You really don't. Okay. And so give yourself leverage, save your PG, your personal guarantee, your personal credit, and I'll delve a little bit more into that later. But you absolutely want to be establishing business credit. And here we think about things long term, right? So in business, a common problem that we typically find is we're working in the business, right? You don't really have a lot of time to do everything else. I got to do my marketing. I got to do my social media. I got to do my accounting. I got to do my payroll. I got to do this. And I got to go get the kids. And I got to do this. Like it sometimes can feel like you're working in your business. But what you have to do, right, is you're strategic now with this, okay? So you've given yourself a layout of how to move forward. Now, the third thing you want to be doing is you absolutely need to be focusing on your accounting, okay? Now, you might not have an accountant right now. You might not even have be in the position to bring somebody on to take on that role. But there are some things that you can do in the meantime, guys. You can get, solutions like QuickBooks and stuff like that. So, but make sure that you are on top of this, because when you can see what's going on in your company, when you can actually look at the numbers, you can measure it. When you're measuring something and it's tangible, then you triple your chances of growing. So, and that is exciting. Okay. So make sure you're keeping record of your accounting. Now, if you're going to be applying for 150,000 or under, you typically are going to be submitting bank statements and stuff like that. But as you grow, right, you're going to be submitting P&Ls, your profit and loss, balance statement, and things like that if you're looking for larger financing. Here's a tip that I want to give you guys. One of the benefits of having all of these elements in order is, let's say you're going to get, financing and you don't automatically qualify, right, just based off of the bank statements. But you actually have had substantial growth, but maybe you just had a difficult past 3 months or 6 months, right? You By looking at the complete financial picture, there might be a solution in there, right? If you have all of those elements together. Typically what we find is when we ask for, if the lender or the under is asking for that, well, you know what, we might be able to do something here. Do they have additional documentation? Do they have P&Ls? Do they have projections that they could turn in where we can see the potential here? When you don't have it, well, then you're just automatically shutting yourself out. So give yourself some opportunities here to grow. Get with an accountant, or start with QuickBooks. Okay, and I think QuickBooks is like $15 a month, you guys. Okay. Now, what are some things that you can do to get started if you're already commingling your personal and business finances? Let's talk about that. Okay. Now, I've talked with a lot of people who, when I approach them about mingling their personal and business finances, and this is because, let's say, for example, you're transferring. Okay, you're engaging with your client. The client pays you through like Venmo or Square or Stripe or whatever, and then you transfer that to your personal account. Right, it's depositing into your personal account. Then you transfer from your personal account over to your business account. Okay, that may look like, oh, on paper, I got 15 grand in revenue this month. I'm increasing next month. I've got 20 grand in revenue. No, guys, if you look at it from the lender perspective, okay, those transfers that you're doing, they don't even count, okay, because it's coming from your personal. So it doesn't even count, y'all. So take that money that's coming from your client and have it going depositing into your business bank account. Here's another thing. You do not want to be doing your liquor purchases. I'm talking to you. You know who you are. You don't want to be doing your liquor purchases. You don't want to be doing, your McDonald's purchases. You don't want to be doing your nail purchases, going to the salon, all kinds of crap, right? Don't do that on your business account, okay? Not only that, guys, but you're decreasing your cash flow, okay? They're looking at your deposits, right? So, but when you're doing all of that, right, you are, it shows that you don't know how to separate your business, that you're not as credible, right? It doesn't give them the reassurance that you need in order to get the funding that you're looking for. So make sure that you keep this separate, all right? I'm going to tell you something, guys. I have seen applications and clients that have the amazing potential to be funded. Like there is an opportunity here, but you don't have the paperwork in order, or you don't want to go back and switch it. For some reason, it's like a mental thing. You're like tied to that account, right? Even though innately somewhere on a deeper level that it's holding you back, because if you're constantly being told that through the lenders that you can apply for. Now, remember, you want to get good rates and terms, but if you're just out here trying to get whatever you can get, you're probably going to end up with like a 40, 50, 60%, short-term loan, okay? So get on top of this, guys, and make sure you are please separate your personal and your business finances, because it is the number one thing that I see holding people back. So how can you do this? Well, the first thing that you want to do, and let's get rid of this liability here. Well, the first thing that you want to do is you want to establish a business entity, okay? So you want to be a LLC or you want to be a corporation, okay? We already talked about sole props, their hobbies. Okay, sorry, but you want to be an LLC or you want to be a corporation, okay? Especially if you're going to be getting financing, okay? The second thing that you want to do, you want to go and get a tax ID, your EIN. So you want to get your EIN from the IRS, go to irs.gov, okay? And when you're establishing your entity, all you got to do is go to the Secretary of State, okay, whatever state you're in, okay? And I got a list of all 50 if you need it, just DM me. So then the third thing you want to do, I didn't even write it down. The third thing you want to do is get a business bank account, all right? Now, one thing I got to say here that we have to touch on, okay? We got to cover this. Now, there are some new banking platforms, right? There's Novo, there's Ro, which Ro is a new one that I just found out about, but Novo's pretty big. I want you guys to know that if you do decide to go with one of these platforms, and I'm not dogging them at all, if you do decide to go with this, then make sure you have another bank account. And it's not a bad thing if you have multiple bank accounts, but make sure you have another business bank account, okay? Because some lenders don't accept those institutions, okay? So, well, they're not actually institutions, right? So don't have a backup plan, okay? You don't want to be relying on that because it can be a challenge, all right? So You want to keep accurate records. Oh, one thing I want to say about the bank account is don't stall. Okay, I hear this a lot. Yeah, when I get $1,000, then I'm going to go open a bank account. Yeah, when I get to this point, then I'm going to go open a bank account. If you are taking money from clients, if you are accepting money for services that you're, or a product or whatever, then why there's no reason why you should be waiting. If you went down and you opened an LLC and if you registered, then there's no reason why you should be waiting. Literally, the only thing you're doing is stalling your credibility on paper. That's it. So that you can continue to do that, but that's what you're doing. So you're just stalling the process. Now, the other thing you want to do, and this is big, 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 accuracy. You want to keep accurate records, okay? And if you need help with this, reach out, right? I'm not an accountant, I'm not a tax strategist, but we can refer you to some really reliable people who can help you. But you might already have them within your network, right? So, but one thing you need to do is you need to make sure that you're being accurate, okay? Keeping accurate information. Everything is matching across the board. Your address, the way that things are spelled. We had a client that actually had a trucking company. They had a partner, and when they dissolved the partnership, they dropped a name, a word from the name, but they didn't update it with their business bank account. So even though they had been operating and transfer and depositing into that account, it didn't match, so it didn't matter. So these are the little things that you have to pay attention to, guys. Now, the next thing you want to do is you want to get a DUNS. Okay, go to dnb.com. A DUNS is going to allow you to start building business credit. Okay, you need it. Okay, so you can get this easily. You go online and you can actually look it up and see if you already have one. Do I have a DUNS right now? Or then you could just request one. Okay, so we will get a DUNS number. Now, what you can do here after you have this, guys, is you can start applying finally with some tier 1 vendors. And you do not apply before you qualify. Just don't even do it. So figure out what these requirements are, figure out if you fit into it, and then go and apply. But I can tell you right now, if you're starting off and you're with vendor credit, the tier 1, they're going to look for your business address, business phone number, that you have a physical location. Okay, so even if you're working from home, you want to register your business to a virtual address, not a P.O. box. Okay, do not get a P.O. box. All right, don't do it. So get a actual virtual address or use the brick and mortar address that you currently have. But you can, if you have a brick and mortar, you can start with, remember how we said you want to actually be starting with things that you're already using, you're already implementing. So if you have a brick and mortar location, right? If you have a virtual office, you can be reporting those accounts to certain companies that will report to the credit reporting agencies, and now you have a business credit profile. That allows you to get all the better rates and terms that you're trying to get to, okay? So what is that doing? Get your DUNS and all that. The tier 1, you've got your business credit. Now, if you have the option to accept receivables, do it. Okay, if that's something in your business, because it gives you more opportunities for funding as well. Now, one of the biggest problems, guys, and this is why we're doing this training today, is because a lot of business owners are working in their business. Okay, one tip that you can do is outsource, right? Outsource, because time is one of our most valuable resources, right? So outsource if you don't know how to do some of these things, okay? In the long run, if you're making the comparison in the long run, it could be a viable investment for you, as opposed to just doing everything constantly through trial and error and having to go back and back. You bring in someone that actually knows how to do something that you don't know how to do, which, like your accounting, and then they can help you, get to that next step. But the one thing that you don't want to do is you don't want to just let it go and just hope that things will work out. All right, so guys, so if you guys have any questions about why you should be separating your personal and your business finances, then don't hesitate to drop a comment. Don't hesitate to reach out, because we want to see you win. 2025 is all about opportunity, and I'm not listening to any of this bullshit that they're saying that there's no funding for women, there's no funding for veterans, there's no funding for minorities. Guys, that's a trick to keep you down, okay? There is a ton of capital out there, but you have to stop complaining. You have to get strategic. We have to get accountable, and we have to figure out what's going on, because we are here to help you. Banks, credit issuers, and lenders, they want to work with you, okay? The SBA wants to work with you, okay? Unfortunately, a lot of conventional banks right now, they're not really working with a lot of companies that are not generating a lot of capital. So if you are still under like that $10 million mark, it can be a challenge, which most businesses are. So if you have any questions about some of the things that we talked about today in class or what steps that you should take next, then go ahead and plan your one-on-one funding planning session at plan.dominoeffectsgroup.com. You can also share this video with a friend. You can give us a call at 888-488-4145, and we'll be happy to speak with you. You can talk with any of our advisors. That's it for today, guys. Make sure you like this video. Make sure you share this with your fellow entrepreneurs, because we are creating impact in 2025 with helping more businesses get funded, but we can't do it alone, and we want to hear from you. All right, you guys, see you next time.